The next opportunity to make a profit that you will encounter very regularly is something we call a safe haven play. A safe haven is an asset that investors flock to during times of uncertainty, and in fact it's very important to just spend a few minutes talking about the concept of uncertainty. As you get to know and understand the market, you'll quickly realise that its number one pet hate is uncertainty. The market loves nothing more than to have a really clear picture of what is happening over the next few months, and when it feels that it has that clarity and certainty, everything carries on wonderfully. However, when bad things happen, which result in the market no longer being able to clearly see or forecast what will happen in the coming months, the irrational, emotional, manic depressive side of its personality takes over, and the result is major volatility. You will hear the term volatility a lot in your day-to-day analysis, and all it means is that the prices are moving a lot. So if there is volatility in the market, you know the prices are moving around a lot, and if there is no volatility, then you know the prices are quite stable and not moving around much at all. Now, coming back to uncertainty, with it comes a desperate scramble for anything that will make the market feel safe. And there is nothing that makes the market feel safer than investing into traditional assets that provide shelter from economic storms. In practice, this means things like gold, and in the world of currencies, the Japanese yen. When there is turmoil in the markets, you will inevitably hear about traders flocking to buy the Japanese yen, and then see the currency surge in value as all the buying takes place. These surges in value can literally happen overnight, so be careful if you're ever short the Japanese yen. What is happening in that scenario is that the market is investing into a currency they perceive as being much less exposed to collapse than the rest. But what makes the yen so special? Well, the simple answer is that the Japanese, along with the Swiss, are the only two nations with an independent, unpegged currency that are net creditors to the rest of the world. That means that the world owes them money rather than the other way around. Japan also has a unique situation where pretty much all of its debt is owned by its own citizens. This makes it much less likely that they will do anything to call that debt in, because they'll be essentially bringing the roof down on their own house. So the combination of these two things mean it's pretty stable and less exposed to market turmoils than other nations around the globe. So another really good play to look out for is when something bad happens and you start to sense the market is in panic mode. You should look at buying Japanese yen and riding the sometimes extreme moves caused as the market flips between greed and fear. The most important thing, however, is that you are fully aware of safe haven plays, you don't get caught out by them. So what would a safe haven play look like, and how do professional traders take advantage? Well, it's always good to use illustrations, using real currencies and events that you will likely see happen. So let's imagine that we do our daily research and notice that overnight there's been panic in the markets, and we start seeing the word uncertainty bandied about, and there is talk in the news feed of the markets being afraid and scared of the current conditions. We instinctively know that this means the Japanese yen will be a target for investors to flock to. So this could be a great opportunity for us speculators to jump into and ride along with that move for a nice profit for the rest of that session. Now, when buying the Japanese yen, we use the same kind of rules and principles that apply to all other types of profit opportunities we've looked at so far. And that's making sure we are buying against a currency that's very likely to be weak at the same time. This type of analysis gives us the maximum potential for profit. In a safe haven play, the currencies that suffer the most are those that are perceived to be the highest risk. And because professional investors always correlate risk to reward, this means that those currencies with the highest interest rates get sold off the quickest during these market panics. So as soon as you see that you want to be buying Japanese yen because of the panic, you should also be looking to buy it against a major currency with either the highest interest rate or the largest amount of bad or negative news surrounding it at that specific time. The downside of a safe haven play is that it can be incredibly frustrating to trade, simply because it's almost impossible to predict how long the market will remain depressed or how far the currency has to move against its long-term fundamental direction before the market starts to get greedy again and trade it back. Generally, large firms will teach their traders to trade these events short terms, which means jumping in and out during the same day to ensure profits. There are of course obvious exceptions, and they include huge one-off events that clearly are much bigger in scale than anything the market could have imagined, such as the global financial crisis of 2007 and 8. Go and take a look at the safe haven plays that happened during that time. During events like that, positions could be held for days or even weeks and reap many thousands of pips, but of course these opportunities are rare. The key to you being there to take advantage of them is understanding what drives the markets and then learning how to interact and predict market behaviour in such a way as to almost instinctively know when a move is likely to happen. So safe haven plays are very powerful, but they require a little bit of extra attention when managing and planning your position. But definitely start looking out for them, and they happen pretty consistently as the market has its traditional mood swings, and over time you will see how much opportunity there is to use these events to contribute to your trading income. If you're wondering about what to do when in a trade, don't worry, because we'll be looking at all of that in the next few videos, so that the next time you take a trade, you'll have a much clearer idea of what to do and, most importantly, how to do it.